Now let's stress test TaxMemory.ai a little. Instead of asking something simple, we're going to run a few difficult tax questions through it and see how it responds. I'll open the chat box here, start a fresh conversation, and give it a more complex scenario. The goal is to see whether it can understand the facts, apply the right tax rules, cite the authority, and give us clear next steps. So for the first question, we're going to ask, a 100% S-Corp owner paid 2025 Marketplace premiums personally and forgot to include them on the W-2. Can we correct payroll and still claim the self-employed health insurance deduction? And just like that, it answered, yes, if you correct payroll so the 2025 premiums are treated as S-Corp wages, you can generally still take the Section 162L self-employed health insurance SEHI deduction on the shareholder's 2025 Form 1040, subject to the usual limits and marketplace/credit coordination. Explanation. For a greater than 2% S-Corp shareholder, your 100% owner, to get the SEHI deduction, plan must be established by the S-Corp. That's satisfied if the S-Corp either pays the premiums directly or reimburses the shareholder for personally paid premiums and treats that amount as wages. Premiums must be included in W-2 Box 1 wages, but not Box 3/5. For a greater than 2% shareholder, the health premiums are taxable as wages for income tax, but not subject to Social Security/Medicare. Deduction limited to S-Corp earned income. Section 162L deduction cannot exceed the shareholder's wages from that S-Corp, their Section 1372 earned income. If the 2025 W-2 left off the health premiums, the IRS position is that the shareholder normally does not get a Section 162L deduction unless you fix payroll so the plan is treated as established by the S-Corp and the amounts are in Box 1 wages. Correcting now, for 2025, is standard practice. Have the S-Corp reimburse the owner or reclassify 2025 draws/loan as reimbursement for the 2025 Marketplace premiums. Issue a W-2C adding those premiums to Box 1 only, not Boxes 3 or 5, using the 2% S-Corp health insurance pay type. Deduct the premiums on the 1120-S as officer health insurance. Take the SEHI deduction on the owner's 2025 Form 1040, limited to their S-Corp wages. If the owner used Marketplace APTC, you'll also need to rerun Form 8962. The SEHI deduction changes MAGI, which can affect the final premium tax credit/repayment. And as you can see, when we scroll down, TaxMemory.ai shows where the answer came from, including clickable authority links if we want to go deeper. It also gives us practitioner discussion links on the topic, which can be useful if we want to research how other tax professionals are thinking through the issue. But for this scenario, the answer is clear, and overall, we're happy with the response. Now let's take a look at the action steps. TaxMemory.ai automatically gives us the next steps that should be taken from here, which are confirm owner is a greater than 2% shareholder and that no employer-subsidized plan is available via owner/spouse. Have S-Corp reimburse all 2025 Marketplace premiums, or reclassify existing 2025 draws/loans. Run a W-2C for 2025. Add premiums to Box 1 only, not to Social Security/Medicare wages. Book the expense on the 1120-S and take the Section 162L SEHI deduction on the 1040. Coordinate with Form 8962 if PTC/APTC is involved. Document the corporate health plan and the late correction in the work papers. And again, this looks great, so we'll ask TaxMemory.ai, can you write an email to the client with the action steps, please? And just like that, it generates a personalized client email based on the context of the answer.